the freight industry is only focused on cost historically. And we're saying, like, well, let's look at these other factors and see.
Hello and welcome to Bloomberg Quint, and we're coming to you with an update after the 33rd reconvened meeting of the Goods and Services Tax Council has concluded in Delhi. The GST Council has approved the rate cuts for the real estate sector in its meeting. Considering the recommendations from the ministerial panel on the issue, the all-powerful council has mandated that under construction properties in normal category will attract 5% GST rate instead of the current 12%. The GST for affordable housing has also been reduced from the current 8% to 1%. Now, both these rates will apply without the benefit of input tax credit. To understand how this will impact or will it boost the demand in the real estate sector and some of the other underlying implications for the real estate industry, I'm joined by Ritesh Kanodia, partner at Dhruva Advisors, and Anuj Puri, chairman at Anarock Property Consultants. We'll also be joined by Niranjan Hiranandani, MD of the Hiranandani Group, and Chetan Shah of Marathon NextGen. Ritesh, I'll come to you first. Both the 5% and 1% rate cut will apply without the benefit of input tax credit. Now, earlier, or rather so far, the debate was that the buyers weren't sure how and when and if the benefit of the input tax credit that was currently being availed, whether actually flew to buyers or not. Does it, on the face of it, solve that problem?
The answer would be yes. It solves that problem because it's very clear that the builder would not get ITC when he goes for 5%. So what a customer would be charged is, the 5% or the 1% rate on the face of the invoice.
Okay. Anuj, please come in here.
When you spoke about passing of ITC credit.
Sure, please carry on, Ritesh.
No. So when you spoke about passing of ITC credit, I think the larger issues were around whether the credit per se was available to the builder or not. So for example, what used to happen was if I sell a property after OC, then there is a debate around eligibility to credit. So one of the largest issues for the builder was determining exact ITC that needs to be passed on. So that was one of the open issues under the GST regime. Now with this new amendment, the question of credit and the question of passing on per se doesn't arise.
Mr. Hiranandani, do you want to come in here and help us with how does this make the rate cut help the real estate industry?
Yeah, certainly. First of all, it should be the customer's perception has definitely been that we will not pay 12% under construction, and we would rather wait for the construction to be complete before buying, and that is why a large number of buyers, even though they wanted to close the transactions, were postponing it till after the occupation certificate was issued. So I think this was a very big issue. Hence, 12 to 5 is a big issue, and 8 to 1, of course, is a fantastic issue. So I think under construction properties which were held up will certainly make a world of a difference. The second part about it, the issue of input credit and other issues at the time of occupation has been a problem all the time. And also the fact about what is being passed on and not being passed on. I think now that matter will come to an end and there will be no issues in terms of constantly making sure about as to what is being passed on or not, because the amount to be paid by the buyer under construction will be 5 or 1, and there is no question of any other set-off at all, either to the builder or to anybody else. But there have been two aspects of it which I think I need to flag off. One was that I was expecting that the GST on cement should have come down, which was expected because that is a very high rate on cement, and that is something which has not happened, and I think that needed to happen because cement is a very big factor both in infrastructure and housing, and since no input tax credit is there, I think that amount should have also happened at this point of time. And the second is on the rental housing. I think nothing is of rent. That was something which we were looking at, but luckily joint venture, TDR and other aspects have been covered.
Okay,
good,
sure.
Good. Very happy. Welcome.
Okay, Mr. Hiranandhi, hold that thought. I will come to TDR issues. I want to get in Anuj Puri here. Anuj, they have also tweaked the definition of what qualifies as affordable housing, both in metro cities and non-metro cities. So earlier in the metros, the carpet area was 30 square meter. That has been increased to 60 square meters. And in non-metro cities, earlier it was 60 square meters, which has been increased to 90 square meters. But they have capped the cost of this affordable housing benefit of 1% rate to 45 lakhs. Do you believe that with the increase in carpet area, there will be more number of units which will be available in the affordable housing segment, and that will sort of, and with a lower GST rate, it will enthuse buyers?
So overall, fantastic news. I would say it will bring in a lot of cheer within the real estate industry, which has been struggling for long. Clearly it becomes very easy for the customer and the developer, although there is no input tax credit, but, it was a very complicated way of arriving at input tax credit. Extremely delighted to see the affordable housing at just 1%. I mean, clearly this government is walking the talk on affordable housing, bringing it from 12 to 8 before, and now from 8 to 1. That's fantastic. Third is they've understood that the sizing of affordable housing really needs to be more than 30 square meters or 60 square meters for metro and non-metros respectively. So that has gone up as well, as you rightly said, to 60 square meters and 90 square meters. So it will certainly bring in more homes into that affordable category. Having said that, this cost that they have put up to 45 lakhs is going to be a little bit of a prohibition in terms of the definition for affordable housing. But still, I feel overall it's great news, fantastic. The only thing that it is, and, maybe we'll need to read the fine print, that this rate is going to be effective from 1st April 2019. So, does it mean that anybody who's buying tomorrow up to 31st March does not get this benefit at all? And, this is a crucial period given that the financial year closing is going to happen on the 31st of March, and many developers would want to show maximum sale in this, 45 odd days.
Sure. Chetan, please come in here and weigh in on how you're seeing as the impact of the reduced rate cut in affordable pricing, and also would it then properties which are sort of priced near to 45 lakhs, will this now entice developers to bring it within the realm of affordable housing?
Yeah, that is certain. I mean, this is fantastic news, reducing 12 to 8 and for affordable reducing to 1%. That's really great news. When they have kept a limit of 5% or this 45 lakhs in this 1% affordable limit, that limit actually excludes all the properties in the metro city of Mumbai or even suburbs. So that is not going to be very much applicable. Another issue I see is this transition. The transition policy is still in the making. So what happens from here till 1st of April 2019 is the issue. Just as how people were waiting or fence sitters were there, that they would wait till occupation is received. Now there would be people who would be unnecessarily waiting till 31st March. They should have made this applicable immediately from tomorrow itself. And that would have, kept those issues in abeyance. What it definitely solves is all this litigation and how the credit of input credit was being availed, and the issues about, carrying forward the input credit and all that. Those litigations are all over, and there is a clarity and transparency for a buyer that he is getting definitely the input credit. He is directly being charged 1% or 5%. There are only two slabs. So simplicity is definitely there. Cost needs to be controlled, like cement and other items that go into the making of real estate product. That needs to be, brought under control so that the input credit that is getting lost is actually reduced so that true cost can be passed on by the developers. Currently, they have seen that 58% is the input credit. But if you see in some of the slum projects, we have input credit available for more than 70%. So in effect, for that, the cost of about 2% will be higher in the books of developers. So
Sure.
these are some of the issues.
Ritesh, come in here. Does this reduced rate automatically, is it as simple as, okay, the GST rate is reduced and hence it will convert into lower sort of, cost price for the buyers? Is it the translation as simple as that, or are there nuances here that will really play out once, builders comes to grip with the new rates that will really determine whether or not the property rates actually come down in the hands of the consumer?
So, couple of things I think that we need to wait and watch is number one is that whether the new rate notification is optional. So, what they're saying is that you can pay 5% without ITC. Does it mean that you have to necessarily go for 5%, not take credit, or you still have the option of a 12% or a 18% rate? See, the determination of whether a 5% is beneficial or not is also a factor of how much input tax credit was otherwise available to me, and what was the actual effective GST that I was paying. Today, when you talk about under construction property, what happens is a procurement generally precedes a sale. So there is an input tax credit which has been taken. The input tax credit is accumulated in the books where, let's say, a builder is not able to use those credits. There is a question around reversal of credit post completion of OC. So if my OC, for example, has come and has sold the property, whether the credit is per se eligible, not eligible is a question mark. People have been taking a view that credit should still be eligible. Now, during the transition, obviously, there would be a closing balance of input tax credit which needs to be written off. So I think all this needs to be sort of taken into consideration while ascertaining whether the builder would immediately be able to pass on some benefit to the buyer or not. Another aspect is, of course, what are the cost parameters of a builder with respect to any property. So let's say a construction which has started earlier where the builder has taken development rights, and the development rights have attracted GST. Clearly, those kind of properties may not be, an ideal situation where 5% could be beneficial. Of course, there is a new amendment, proposed amendment to say that TDR, JDA, etc. would become exempt. So I think a lot of calculation will need to go into, whether what happens to my old property, what happens to the new property, what is the interplay between my cost and my sale value, etc. So all those need to be seen, and whether 5% is an optional scheme, or is it like you have to mandatorily follow 5%?
Okay, Mr. Hiranandani, can you weigh in on some of the issues that Ritesh has pointed out, and give us a sense on whether these GST rate cuts will actually translate into reduced prices in the real estate sector, and also how will it work for let's say some of the buyers who are let's say in the process of acquiring the property. So let's say they have partly paid their EMIs, but some of them may spill after April this year. How will the rate cut work for those guys?
I think the transition phase will have to answer those questions which you have asked, which have not been answered. But my view personally would be that whatever is the payments done up to 31st March will have to pay the 12% GST on the installments to be paid. And those installments which will be paid post 1st April, they will be at 5% without any input tax credit. So the benefit up to the accounting year 31st March will be able to give us benefit against the 12% tax paid. You'll be entitled to the benefit of input tax credit, and that would not be applicable afterwards. But overall, if you see, from an overall litigation point of view, the developer over the long run will definitely be clarified, because the issue was, are you passing on input tax credit? Are you pricing it wrongly? A lot of discussions were taking place. And there was the issue of anti-profiteering also going around in terms of some notices to some developers also. I think those issues will get closed up completely. And also the fact that the emphasis on affordable housing continues in terms of the whole situation, and everything from, the making infrastructure status, which means tax-free development for affordable housing, to 90% loans available in the case of affordable housing. Then again, interest subvention in the case of affordable housing, and also the fact that the state governments in Maharashtra have reduced the stamp duty from 6% to 1,000 rupees only for affordable housing. If you look at all that, I think the direction in which the government is trying to say is very, very clear, that please emphasize your entire construction activity into the affordable segment. As far as the other segment is concerned, it's more about getting clarity in the line and making the consumer more comfortable and clear in his mind. I don't think much more benefit may have come to the persons, but I think the closure of transactions will definitely happen because it has come down from 12% to 5%. It's a big story. And I don't think we should undermine the fact. The fact is, yes, in some cases, marginally, some people may have to pay more tax as developers intend. But at the end of the day, I think that will be absorbed, and over a period of time, I think it will be good for the industry.
Okay, Anuj, give us a sort of consultant point of view, keeping in mind the buyers. How should I optimize at this stage if I'm, let's say, sitting on the fence, for a buying decision? How should I optimize this rate cut for myself? And also, some of the points that Mr. Hiranandani touched upon, that it's not clear that when these benefits will actually flow to consumers, and also the anti-profiteering point might continue to be alive given that they have in fact reduced the tax rate. So they may still go to the developers and say that, hey, your rates have to come down, and if that doesn't show, the notices might still be alive. So give me a perspective on how buyers can currently optimize these rate cuts for their portfolio, and also how long will it take for the rate cut benefit to show in the pricing?
So I'd say 3 or 4 things. One is, the property rates would not come down. What will come down is the overall cost of acquisition. In the overall cost of acquisition, there is a property price, there is stamp duty, registration, and GST. And that makes it the total cost that the buyer has to pay to acquire that particular property. So the GST component is going to come down significantly in the affordable and the other segment, but not necessarily that the property price is going to come down. Is it for sure that they're going to get the overall cost benefit? Absolutely. I mean, in affordable housing, it's significant. From 8% to 1%, I mean, that's nearly 7%. That has been brought. Yes, it does not have any input tax credit, but literally just 1% on GST, which was earlier at 12% for affordable housing, which had then subsequently got into 8% and then now 1%. So clearly there will be a benefit that the buyer is going to get in the overall cost, not necessarily a property price reduction. The second is, this transition policy. I think all of us, on this panel, are wanting to know more about it, that how is it going to happen between now and 31st March? Should the buyer buy, or should he wait till 1st of April? Should the buyer continue to pay installments, or should he wait till 1st of April? I think there will be a number of questions that need to be clarified. Clearly this is a very crucial time for the developers as well, where there is a liquidity crunch. There are going to be payments to be made to the NBFCs and the banks. And if the public believes, or the buyer believes, that I am not going to buy until 1st of April because I get a significant discount in the overall cost, then literally the balance of February and March is going to be a wipeout, which will be, a big disadvantage to the developers because it is a very crucial quarter. In terms of anti-profiteering, because there is no input tax and you're applying a specific GST, which is 5% and 1% for affordable, I don't think the anti-profiteering is going to impact in this one, because it's clear that there is no input tax credit that you are able to get in. You have to just apply 1% or 5%, and there is no offset available for it.
Okay, understood. Ritesh, please come in here. They've also decided that GST exemption will apply on transfer of development rights, joint development agreements, long-term lease premiums, etc. What does this mean, A, for the industry, and will it take care of some of the litigation that a few of the members in the panel talked about?
I think it's a very significant amendment because there has always been a debate around taxability of JDRs, development rights, so there were advance rulings which went into negative on long-term lease to say that they are liable to GST. With respect to TDR, the debate was, whether this is transfer of property, the transfer of land which is covered by the Transfer of Property Act, or is it a rendition of a service? And this debate has been continuing since the GST regime, because the way the GST law is worded, what is covered is only the sale of land. So any kind of a transfer of development right, etc., there was a issue around levy of GST. Now GST is applicable, yes. One point is that credit is available to the builder. However, what happens is, because there was a gap between the sale of property versus the construction, there used to be a huge accumulation of credit. Now 5% in a scenario where GST is levied on development rights clearly would have been not workable, because the cost increases substantially. The accumulation of credit itself would have been such high that 5% plus the GST cost on procurement would itself have taken the rate to a substantial amount of GST. So I think it's a very, very significant amendment. It would also end the litigation around applicability of GST on joint development agreements and development rights.
All right, Ritesh, the litigation, or rather cases that are currently alive, will they in any way or in any fashion benefit from this exemption?
No, because the exemption doesn't take away the taxability for the past. In fact, what it tries to clarify is that these were taxable under in the pre-amendment regime. Let me tell you also, like in many situations, the builder or developer have taken a conservative view, gone ahead and paid GST on such items because on the viewpoint that credit is available. Now the challenge is when you go into transition and go into the 5% rate, there would be huge accumulation of credit in the books, which has now it seems that credit would now become not eligible, because if you have to transition to a 5% rate without ITC, then you can't carry those credits in the books. So in fact, when you spoke about reduction in the cost, I am not very sure whether the cost for like initial instance for old properties would sort of go down, or maybe it could go up also marginally. So
because
that is something which we'll have to see, even for new properties.
Because you're not being able to utilize the accumulated ITC.
Absolutely.
Okay. Okay, you want to complete that thought?
Yes, because my cost, how does the cost gets worked? Yeah, how does the cost gets calculated is basically on the basis of your net GST. It is not always on the gross. So I reduce my ITC from my cost. So if 5% comes into play, the ITC gets added back.
All right, Ritesh, Mr. Hiranandani, Anuj and Chetan, thank you for joining us with your first quick thoughts, but key takeaways from what the panelists told us, that it was important for the GST Council to consider also reducing the GST rate in the cement sector, and also probably consider how if the rates can be tweaked for rental housing. The other important point that has come forth is what happens between now and 1st April 2019 to bias it on the fence. And lastly, it's again, nobody is able to give us a clear answer on whether the property rates will immediately come down, because the developers will now need to go back and do the maths before they can pass on the reduced rate cut benefit to consumers. Thank you for joining us here, and we'll keep bringing you updates as there is more clarity in terms of the guidelines after these rate cuts. Thank you for joining us.